Good morning and welcome to this week's edition of Winston's Weekly, covering all things property. I'm Peter Milios and I'm your host for today's property chat. Welcome back, Winston.
Thank you, Peter.
Winston, as always, let's dive into what's been happening in the US markets. The big news this week is obviously the Federal Reserve cut rates for the first time in 4 years by 50 basis points. It's a very sizable move to start the cutting cycle. What were your key takeaways from the Fed's decision?
Well, the market was sort of deliberating whether it was going to be 25 basis points or 50 basis points, and the Fed decided to do the 50 in one hit. We've got to remember that there are only 3 meetings of the Fed before the end of the year, and the next 2 meetings are very close to the election over there, and the market was sort of expecting about a 1% through to the end of the year. And so one of those 3 cuts would have to be 50 basis points and the other 2, 25 each. And they decided to go early with that.
Yeah.
I think it sort of shows that they're fairly confident about inflation over there continuing to ease. And they're also keeping an eye on the employment data, which is quite important. So initially the market took it a little bit positively initially, then negatively, and then overnight all markets have been quite strong as a result.
So, you did mention that presidential election in November. How does the Fed's decision impact this?
Well, if you listen to the rhetoric of Donald Trump, he wasn't happy with the 50 basis points, but then he's sort of arguing that the 50 basis points was required because things are so bad that it sort of indicates that there's likely to be a recession, but that's his take on it. But as I mentioned, one of those cuts had to be 50 basis points, and they've done it early rather than late.
And how will this impact the Australian landscape?
Well, we're in a different boat here in that inflation really is still stubbornly high. It's closer to 4% than it is to 2%, whereas in the US it's closer to the 2 than it is to the 4. So the RBA governor continues to maintain her stance that it's unlikely to be a rate cut this year, and pushing it out into 2025. And I think that's likely to be the case because, as I said, the inflation number here is remaining quite high.
And Winston, let's dive into the REIT market. We can see that the commercial property market is turning around. There's solid fundamentals in areas such as retail and industrial property, combined with the outlook for interest rates and gearing ratios appearing to have steadied. I just want to know your thoughts on the overall sector.
Well, the overall sector this month is up nearly between 6.5% and 7% for the period to date as of yesterday. So it has been a good showing for the sector. And there's probably more to come, but it'll probably be within specific property subsectors. As Amazon has come out as wanting workers to come back in 5 days a week.
Yep. Okay.
The state government has asked for its employees to come in 5 days a week. So there is some pressure in terms of trying to get more people into office space. Or utilising the office space that's there already. But that's sort of slated for early next year. So there's still some issues over the next couple of months, I think. But overall, I think the concept that rates are going to come down in due course, that the cost of borrowing is going to come down as a result, which is going to help the REITs to some extent. And we are seeing, as I said, a little bit of interest in some M&A activity with the Charter Hall Retail and Host Plus making a bid for HPI, Hotel Property Investments. Now the bid's at $3.65. The stock is currently trading at $3.75. So it would indicate that a higher bid would be required. Now whether Charter Hall and Host Plus do play the game and move up, remembering that the NTA is $4, and so it would be hard for the HPI directors to effectively recommend accepting a bid that's below that valuation. So anyway, the game's not over. It just remains to be seen. We have to wait for those developments.
Yep.
there's also an issue with the Aspen Group, in that one of its largest investors, Brahma, out of Asia, is now no longer a substantial shareholder. I think they've been a bit of a thorn in the side of the Aspen Group, and they did sell out or reduce their exposure to not be a substantial shareholder a couple of days ago. And Aspen is focused very much on affordable rents and affordable housing. So it is a space which is quite relevant to where the market is at the moment.
Yeah, for sure. Is there any particular reason why that investor sold out their Aspen stake?
He's been a long time holder, and I think he's had a few issues with the group. The stock has kicked up since the result. It was above $2. He sold out at $2.08 when the market was about $2.11. But for such a large block, if he took a discount, he's done well out of the investment because he's been there for quite some time, and he probably sees better opportunities elsewhere.
So just looking ahead to next week, what should we be expecting from the property market in the coming week? Are there any key data points or in key events that investors should keep an eye out?
Well, the focus should continue to be on inflation numbers as and when they come out, and likewise the focus should also be on the employment numbers.
Yep.
And the unemployment particularly. The government is a sort of loggerheads with the RBA, saying that the RBA needs to cut because cost of living pressures, but the RBA is focusing more so on trying to get that inflation number down, which is remaining stubbornly high.
Winston, thank you for your time, as always. We'll be back for another edition of Winston's Weekly next Friday. Until then, have a great day.
Thank you, Peter.